Morning guys, Joel Frank here, market analyst for YouTrading, and this morning we're having a quick check at what gold markets are getting up to. So take a look at the chart here. I've got spot gold XAU USD on 4-hour candlesticks, and as you can see, pretty much since mid-August, gold had been gradually edging higher. But you can see here that largely until the end of last week, we'll get to that in a second, but it'd been largely unable to break above this 1800 level. So 1800's here. We had a bit of a move above it just about a week and a half ago, but that didn't last very long. But then you did have this nice support coming in from this gradually moving higher trend line here, which I've got marked up. But then we had this big break above that previous, big break above the 1800 level, then above this previous high from last week. And that was a reaction to Powell, Fed Chair Powell's speech at the Jackson Hole event that the Fed puts on every single year. Just to quickly recap, Powell didn't offer any new information regarding what he thinks the Fed should do in terms of winding down its QE program, and that was taken as a dovish sign because a lot of people had been thinking that Powell was going to use his speech at Jackson Hole as an opportunity to signal something to do with QE tapering, but he chose not to do so. And even some of his comments on inflation and on potentially when the first hikes might come, or the conditions that need to be fulfilled for the first interest rate hikes to come, that was taken all as dovish. So what happens when the Fed is dovish? Well, gold loves it, and then obviously, like I said, we have this break higher. Now, as you can see, gold has been consolidating this previous resistance in the form of last week's high, or that recent high from earlier in the month. That's now offering support, as you can see here. And if you just look, you've got this blue line here. Well, that is the 200-day moving average. That is also offering pretty decent support. Gold markets, just like other markets, FX markets, bond markets, stock markets, likely to be range bound now until Friday, because Friday we have the August US jobs report coming out. Now that is a key piece of data, not only for markets because they get an insight as to how the US economic recovery is progressing, but it's also key for the Fed, and it's going to be key for their decision regarding QE tapering. If it's really, really bad data, then they may want to delay their QE tapering announcement, in which case that would be dovish, of course, and then that would see gold likely move on up higher to challenge these highs here from the beginning of August and the end of July around 118.30, and probably to move beyond that if you go all the way back to this low back in June, that was before the hawkish June FOMC, and you'd probably move all the way up there if the jobs data at the end of the week is bad. If the jobs data is very, very strong, perhaps as strong as it's been over the last 2 months, then that's probably going to see the opposite reaction. You'll see this level of support go, and perhaps a move back down towards this trend line, and the 50-day moving average here in green and the 21-day moving average here in orange, as that would sort of give the Fed more confidence that the economy is ready in the coming months for QE tapering. But yeah, that's how I see gold playing out this week, guys. Hope you enjoyed the video, and I'll see you all in the next one.